Today is my 26th birthday. Last year I made a video talking about the 25 stocks that I loved. We're done with that. We're not talking about individual stocks anymore. Today I wanted to talk about some of the life lessons that I've learned about investing over my past 3 or 4 years about investing, because the whole point of this channel is to share the experiences that I've had and the thoughts that I have so that you can avoid making the catastrophic mistakes that I made early on. So in today's video, I wanted to talk about some of the major investing mistakes that I have learned from early on so that you can avoid them as well. Since it is my birthday, I will ask for you to like and subscribe the video. 90% of people watching these videos are not subscribed, so let's help push this number up a little higher. All right, so I'm going to talk about 5 different investing mistakes that I've made that I think that you can learn from, and let me know in the comments down below what's the biggest mistake that you've learned from in your investing journey so far. Number one, the first thing I wanted to talk about is that you're not smarter than the overall market. This was something that I learned very early on. I spent a while paper trading stocks. I was getting into swing trading or day trading, which I would not recommend at any point to pretty much anyone. But it was the idea that I was doing it without money, and I thought that I was smarter than pretty much everyone out there. People always talk about, 95% of people that are trading are going to lose money. I thought I was part of the 5% that was going to be able to make money from it, and boy was I wrong. You start getting an ego when things start going well, especially with paper trading. You are not using your actual money, and that is one of the biggest things that really jumped out to me after I've taken the step back all these years later and figured out what went wrong during those times. Investing with physical money, stuff that you spent all this time and effort to earn, is a lot more different than just trading money that doesn't matter at all. So if you lose it, it doesn't really matter. I thought that I was better than the overall market, and it resulted in me being very aggressive with how I was going about things. People would give warnings that were great advice on how to avoid losing money while day trading or swing trading. And I was like, yeah, you know what? I can probably do okay without listening to that. And boy, was I wrong. One of the biggest things that I didn't listen to was risk tolerance. People were telling me, don't put this amount of money on one specific stock, especially if it's highly volatile. And what did I do? I put my entire portfolio into one specific stock, and as the stock fell further, I just continued to buy more. This is called bag holding. It was the idea that I just wanted to get back to break even, and it got to the point where I could have salvaged my portfolio at like 30% loss, but instead I kept adding to my position, and as the stock went further and further down, it ended up being a 75% loss for my portfolio, and was the reason why I stopped day trading and swing trading altogether. It was a good life lesson that I needed to learn that, number one, I am not smarter than the overall market, and I'm pretty sure that most people have similar experiences to me if you've ever tried day trading or swing trading. Number two, the life lesson that I had to learn that was important for me in my investing journey is number two, a rising tide lifts all ships and a sinking tide brings all of them down as well. When I first started getting involved with the stock market, I thought I could pick individual stocks that would do different than the overall market. If the market was going down, I was going to pick this stock that was so perfectly positioned to go the opposite way of the overall market that I was going to make money no matter what happened with the overall market. And then a big news story would come out, the Federal Reserve would say something, and the stock market would fall, and my stocks would go down with it as well. It's the idea that the stock market goes and moves pretty much together. These stocks that you're going to be picking are likely not going to be strong enough to resist the pull of the overall market. If the NASDAQ as a whole, if some of the big hitters like Apple, Microsoft, Amazon are down, likely if you're a similar type of stock, you're going to get pulled down as well unless there's some major news coming out on that specific day that will result in the stock price going in an opposite direction. So I thought that I could pick stocks that no matter what the overall market conditions were going to do, I was going to be able to succeed and pick the winning stocks. And it was an important lesson to learn that you are not going to be able to pick specific stocks that are going to move differently than the overall market. You have different levels of volatility, which we've talked on this channel about, which is beta, and it's a measure that shows how volatile a stock is compared to the overall market. One means that if the stock goes up 1%, usually means that the overall market has gone up 1% as well. So the higher the number, the more volatile it's going to be, but in general, stocks are going to move in the same direction as the overall market unless you have specific news events or catalysts that are pushing in the opposite direction. This was the investing lesson number two that I needed to learn, is that a rising tide lifts all ships and a sinking tide brings them all down, and your stock is not special. Just because you think it has the perfect setup, it's likely going to move in the same direction as the overall market. The number three investing mistake that I needed to learn early on is that losing money was probably the best thing that could have happened to me. I've already talked in this video about how I thought I was smarter than the overall market, and I lost 75% of my portfolio. And I look at this as a really good learning experience. This was something where it definitely could have pushed me away from investing as a whole, and I probably could have kept all of my money away from it and felt pretty confident based off of that huge mistake that I had made. But I used it as a learning experience. It was something where, yes, I lost 75% of my portfolio, but it was $1,000 portfolio, so I lost $750. Yes, it really hurt at that time because I was just a normal college student, and that was pretty much all the savings that I had. That's not a catastrophic amount of money. It's not me blowing $100,000 like 10 years from now when I have all that saved up. I can get that back in a couple months. It's a big deal. I really wish I had $750 extra, but it was a good life lesson when it comes to making money and losing money in the stock market. This is why when I talk about people just getting started for the first time, I always recommend starting really small. There is such an emotional response to seeing your portfolio moving up and down in real time, because the entire life you've put your money into a bank. You have these interest payments that are going to be like 6 cents, but you never check your bank one day and see that it's down, $50. You'd be like, what? That's not a safe place. You'd keep all your money underneath your mattress, but it just goes up. Very small, but it does go up. So when you first start putting your money into the market, you need to get used to the emotional response that you're going to have by seeing that the stock price and your overall portfolio is down. This can lead to people panicking and seeing that their stock price is down just a little bit and selling. There was an app that I was involved with for a little bit called Public, which allowed you to see how people were making trades, and you would see someone that would buy a stock and then 5 minutes later sell it. And the reason that they would give is because it was down money, and it was like down 0.25%. Not that big of a move, but they saw the emotional response that it resulted in, and they didn't want to lose any more money. So I think starting small and making sure that you understand how your body is going to react emotionally when your stock and portfolio goes down is so important before you decide to throw more money in. You get to the point now where I don't even check my portfolio on a regular basis, just because if it goes up, it goes up, and if it goes down, I'm a long-term investor, and I'm not worried about these short-term ups and downs of the overall market. So I'm not worried about seeing my portfolio being down $300 in one day. So this was an important lesson, is that you need to understand how your emotions are going to respond to seeing you losing money. And I think losing money really early on was probably the best thing that could have happened to me, because the opposite is I could have made money at the very beginning, and instead of losing $750, I could have lost $5,000. So I think it was good to kind of cap this loss at a reasonable $750, money that I wish I had back, but it was enough that I could learn from. And now I've gotten to the point now where I have learned my lesson when it comes to risk tolerance, and I've become a better investor because of it. The number 4 lesson that I needed to learn is that consistency is way more important than picking the perfect stocks. If you've been around my channel for the past couple years, I specifically only talked about the hottest stocks that I thought were in a fantastic position to take advantage of the current market conditions back in like 2020, when that was the hot thing to do. Now I'm at the point where I think it's so much more important to be consistent in the way you invest, and it's a lot less important about picking specific stocks. I have been much more conservative over the past couple years on how I've decided to invest. Back in 2019 and 2020, it was all about picking the momentum stocks and speculative in nature stocks that didn't have the fundamentals to survive a time like this. And that's why we're seeing some of these top performing stocks from 2020 being really down in 2022 going into 2023. So I thought it was really important to learn the consistency about investing in the behavioral side of it, about consistently adding to my portfolio, instead of just trying to pick the hottest stocks, and be more consistent as an investor. As the market's down, it's so critical to try to minimize your losses while also trying to be able to maximize the amount of money that you're putting into the market. And I'll throw this graphic up right now, which I've used in the past couple videos, which shows the percent loss that you have and how much you're going to have to gain back to get to break even. So the whole point about dividend investing and being a more conservative investor is that your positions are going to go down a lot less than the overall market, and especially these volatile stocks that were doing incredibly well in 2020 and 2021. So if you have a 5% loss, it's going to take a gain of 5.3%. And as of right now, the NASDAQ is down, I think like 30%. So it's going to take a 42.9% return to get back to that. But once you get up a 50% loss, you're going to need a 100% gain. So we're trying to minimize how much our portfolio is going down. And that's why I think being consistent with the type of stocks that you're investing in is so critical. And the idea of consistently adding to your portfolio makes it so that instead of having to go from a 30% loss and needing 42.9%, you're actually not going to need as much, because you are dollar cost averaging and you're buying the stock at a lower basis than what you already had. So it's the idea of consistency is way more important than picking the hottest stock, and that was the 4th important investing lesson that I needed to learn the hard way. And number 5, and the final thing we're going to talk about in this video, is that confirmation bias on YouTube is probably the worst thing that you can be searching out for. The whole idea of this is that if you are all in on a stock, it's something that you feel very passionate about, you're likely going to go look for more information that is going to go along with the viewpoints and opinions that you have on the stock already. So I'm going to give an example. I'm going to pick on Jeremy because I think he is one of the kings of clickbait when it comes to YouTube. But say you bought into a stock like TTCF, which is Tattooed Chef, back in 2021. You're going to look for more videos talking about why they think it's a 10x potential, or what does he have? 10x, 1000%. And and you see videos from Jeremy, and you're going to go on to those videos and think, okay, yeah, there's a very outspoken, popular member of the community that is feeling very confident about the long-term outlook on this company. You're not going to go out and looking for a video that's titled something like why TTCF is an awful stock to look at right now, because you're going to look at it and most likely think, oh, this guy's an idiot, and then you're going to aggressively type into the comments being like, this guy's an idiot, don't listen to him, and then you're going to thumbs it down so that less people are going to be able to see it. When you have videos talking about specific stocks or industries, the type of feedback that YouTube gets, whether it be the like to dislike ratio or the number of comments, is really what decides what gets pushed in front of other people. So if you find a stock that you're already invested in and you see a huge channel talking about why they love it, you're likely going to avoid some of the really difficult conversations that you're going to need to have to try to avoid the catastrophic situations with investing in momentum stocks and high volatility stocks. So there was a video from Jeremy from more than a year ago, why TTCF stock will 10x, 1,000% increases. And if you look at it in the past year, TTCF is down 90%. And if you're going out looking for people to go along with your viewpoints, you're likely in a very risky position. And I think that the best part about investing in conservative stocks is I don't care what anyone else has to say. The boring stocks and the boring portfolio that I have is that way because there's not that many different opinions. No one's going to be like, oh, Apple is going to 100x in the next 2 months. It's a stock that is going to do what it does, but it has a consistency and track record that makes me feel extremely confident, and I don't need to go look for other people on this YouTube or other platforms talking about why they love it so much. So if you're on YouTube or other platforms looking for viewpoints that go along with yours, I highly recommend trying to look at some of the videos that go against your viewpoints and then try to argue against them. If you have a really good argument on why you think they're wrong, that's great. But if you just look at them and say, oh, this guy's an idiot because he's going against my viewpoint, you might need to take a step back, and you might be a little too far into the confirmation bias when it comes to these stocks that you're looking at. So overall, these were the 5 investing mistakes that I had to learn the hard way, and I'm hoping that you can avoid them by kind of listening to what I've learned from the past 4 or 5 years in investing in the stock market. It's my 26th birthday. It's crazy. I am rounding up to 30 officially, and that kind of hurts. I think of myself as a young guy, and now I'm starting to get a little bit older. But as we get older, we get wiser, and that's kind of the reason why I wanted to make this video talking about some of the mistakes that I've made, because that was the whole inspiration for making this channel in the first place back in, 2018? So I wanted to share the things that I've learned, and I'm very curious what mistakes you had to learn the hard way and how you've grown from them as an investor. Be sure to leave them in the comments down below. My name is Andy. If you want to see other videos from me, I have no idea which side it pops up on anymore. I'm going to say this is the video side and this is the subscribe side. But there'll be 2 videos up here and the subscribe button if you want to see future content from me. My name is Andy. I'm 26 and I hate saying that, and I'll see you in the next video. Thanks for watching.